Welcome to ForexTV.com's PM Exchange. It's Friday, December 28th. I'm Remy Hoki. Today I'm joined by Kathy Lien, Chief Currency Strategist at dailyfx.com. Good afternoon, Kathy.
Good afternoon.
Thanks for coming on the show today.
It's always a pleasure.
Well, we only have a few more trading sessions left in 2007, and as we near 2008, we're seeing a euro-dollar trade higher. And today we saw the pair breach the $1.47 mark, but as everybody is closing up their books and liquidity is being squeezed, next week, what do you expect to see for euro-dollar?
Well, next week is pretty much the first trading week of the new year, right? So typically we've got, quite a bit of numbers that are coming out. We have manufacturing ISM, service sector ISM, the big number of non-farm payrolls. So I think it's going to be a pretty active week. Generally speaking, January is a very positive month for the US dollar. We did this interesting study a few weeks ago that we published in DailyFX, and we found that 9 out of the past 11 years, the dollar strengthened against the euro in the month of January. And I think that will probably be the case this January as well, because a lot of things are changing, and I think that we're going to see sort of a shift in the outlook for a lot of the global economies.
And Kathy, since you mentioned the non-farm payrolls at the end of next week, we did get a rise in jobless claims in yesterday's session, and we also saw weakness in the housing data today, but we have more housing data coming out, and we've been seeing a downturn in a lot of the sectors in the U.S. economy. But if you could give us your Fed rate outlook as we head into January.
I think maximum we'll get 2 rate cuts from the Federal Reserve. I mean, most likely they're certainly going to give us one more. But the problem with the Federal Reserve and the problem they face is that inflation is still an issue, and also because of that, they need to be a lot more creative with adding liquidity to the financial system, because that was a huge problem over the past few months, where LIBOR rates were skyrocketing and things like that, but they couldn't lower interest rates because of inflation issues. Now that oil prices are high again, it becomes an even more important problem. So I think that we'll get a maximum of 2, but the Federal Reserve probably find more creative ways to take measures to ease liquidity in the financial system.
And taking a look at the dollar against Japanese currency, we saw the pair trade below 113 and hit a low of 112.65 in today's session. But as we end the New York close of equities today and head into the weekend, if you could briefly give us your forecast for the dollar against the yen.
Okay, well, I mean, dollar yen is suffering quite a bit, but I think it's suffering because of the problems in Pakistan, because whenever we have geopolitical uncertainty, you saw a lot of the weakness prevalent in equities, and dollar yen is the measure of risk appetite, and so it's moving in lockstep with equities. I think that's a little bit of a distortion, because even as grave as the problems in Pakistan are right now, they're probably going to wash over, and the markets are going to focus on beginning of the year issues and beginning of the year positioning. And because of that, what I think will happen is we'll see a resurgence in dollar strength over the next month. I really do think that we're going to have a strong dollar in the month of January, and because of that, I think that we're probably going to see dollar yen probably rise to 114 or something like that.
Okay, and while we're still on the yen, if you could briefly give us your forecast for the euro-yen cross.
Euro-yen's a little bit more interesting, because we have obviously the euro component of it, and that's really sort of limiting a lot of big action in euro-yen. I think overall, I'm looking for more euro-yen weakness, because I think that the euro-dollar rally, it could move a little bit higher, but there are a lot of problems that will start coming up with the European economy. We already saw business confidence at a 2-year low, so I think that's going to hit euro-yen as well.
Okay, and while we're still on the topic of the euro, let's take a brief look at euro sterling. We saw the pair hit another high just shy of the 0.74 mark, and this is an interesting pair from both the fundamental and technical perspective. So if you could give us your forecast for the euro and sterling, both fundamentally and technically.
Well, I think that when the Bank of England, sort of delivered that interest rate cut in December, I basically said this is, a green light to buy euro pound. And at the time, I think we were trading around, 71, 72 cents. So, for euro pound, 200 points is a lot of points. But overall, what we're seeing is the purest form of interest rates at play, or interest rate differentials, because one central bank is clearly keeping staying hawkish and keeping monetary policy on hold, which is the ECB. The other one, looking to cut rates and will probably cut rates again. And also, data is diverging so much. So I think that euro pound gains, you're going to hit 75 cents probably. And technically, you're right. The trend is so strong, and trends are very, very very characteristic of the currency market in general.
And earlier you mentioned commodity prices, so I just want to take a look at both CAD and Aussie against the dollar. Briefly taking a look at commodities, we've been seeing gold futures climb, and today they ended at 842.70 on the NYMEX, while oil futures are holding above $97 a barrel. So if you could briefly give us your forecast for both the CAD and the Aussie.
Well, I'm actually bullish the Australian dollar and bearish dollar CAD at the moment, because even though I said earlier that the attacks in Pakistan is going to wash over in the stock market and the US dollar, which, there's a lot more things going on there. For oil prices and gold prices, however, I think that it's going to have a more lasting impact. Because of that, I think that we may see Aussie dollar gain another, 100, 200 points. Right now it's sort of holding. And I think that dollar CAD will probably come down to maybe 96, 97 cents. I think it's trading right now around 98 cents. So I see a little bit more gains in the Aussie and the loonie, just because of these problems that we have right now.
Okay, and last but not least, Kathy, as we head into 2008, if you could tell us where you see the most opportunities in the FX market.
Well, I think that the biggest opportunity is really the recoupling story, and we're going to cover that a lot in our 2008 forecast in Daily FX. But this recoupling story is really about the other countries, having seen their growth rates slow as well. So because of that, I think that we'll see further weakness in the British pound. I think we'll see an overall recovery in the dollar. Maybe not immediately, but certainly throughout this course of 2008. I think those are two big risks to look for. I also think that the ECB is going to be all talk and no action. And that's also going to hamper any further gains in the euro come 2008.
Okay, Kathy, as always, thank you very much for insight, and have a great new year.
Same here.
This has been your Forex News with Kathy Lien from dailyfx.com. Next up, we have your equities and commodities wrap-up for the day. U.S. stocks ended another volatile session on a mixed note. In thin market conditions, the major indexes moved in and out of positive territory throughout the day. The latest housing data continue to point to weakness in the economy. In today's data releases, the Commerce Department reported that new home sales fell 9% from October to a seasonally adjusted annual rate of 647,000. New home sales are down more than 53% from their all-time high in July of 2005. They're currently at their lowest level since April of 1995. Meanwhile, December Chicago PMI came in at 56.6. At the closing bell, the Dow Jones Industrial Average rose 6.26, ending at 13,365.2. God damn it. At the closing bell, the Dow Jones Industrial Average rose 6.26, ending at 13,365.87. The tech-heavy Nasdaq fell 2.33 to end at 2,674.46, and the S&P 500 gained 2.12, closing at 1478.49. In the fixed income market, U.S. Treasury bonds rallied today, sending yields lower. This came after weakness in the new home sales data. The 10-year benchmark Treasury note climbed with its yield at 4.09%, down from 4.2% late Thursday. The 30-year bond also gained with its yield at 4.51%, down from 4.62% late yesterday. And the 2-year note rose with its yield at 3.12 from 3.21% the day before. And taking a look at energy, NYMEX crude oil prices ended lower after touching $98 a barrel. February crude oil ended down 62 cents at $96 a barrel. Meanwhile, oil hit a high of $97.92 amidst concerns over inventories and also due to violence in the Middle East. Meanwhile, in other petroleum products, January gasoline futures hit a new high of $2.5175 a gallon. Futures prices settled down 3.65 cents at $2.4597 a gallon. January heat and gold futures fell 4.33 cents to settle at $2.637 a gallon. And February Natural gas gained 18.6 cents to close at $7.386 per million cubic feet. And over in the metals complex, gold futures rose for a fifth session, breaking the $840 an ounce level. This came as the U.S. dollar fell to the lowest level in 2 weeks against a basket of other major currencies. February gold ended the session up by $10.90 at $842.70 an ounce. It hit an intraday high of $843.80 earlier. For the week, gold gained $27.30 an ounce. And taking a look at other metals, March silver added 7.7 cents to close at $14.0895 an ounce. March copper fell for a second session, down 6 cents, closing at $3.072 a pound. This afternoon, we're joined by Derek Fry from O&F Futures and Options. He'll recap today's session in energy and metals and also give us a short-term outlook.
Recapping the action that we saw in the metal and energy sectors today, I'll start with energy. We saw kind of a mixed day in crude oil today, ended up a little bit down, but ultimately we still feel that the long side is the place to be for the short term. We feel that the old highs will be tested, probably broken, and ultimately print that mythical $100 level that still has everyone's attention. So until we at least get up there and retest those highs, we feel that we're going to continue to buy dips. Moving over to the metals, we saw a pretty strong rally today in gold, largely on the back of the assassination in Pakistan. It remains to be seen. Really, the Indian markets and everything in the overnight markets didn't have a huge reaction to the assassination, so that's actually a good thing. And so I actually don't think the upward momentum in gold is going to sustain itself. We're actually looking at retesting the old highs here in gold, much like in crude, and then at best retesting those highs, and then really falling back down and retesting the 800 level again. So we're actually, at this point, exiting longs and looking to begin establishing shorts. So that's ultimately what we're looking at. A lot of the weakness that you've seen in the last 3 days in the dollar we think is also a little bit artificial. That's also partially what's pushed gold up, and we think you're going to see the dollar come back and continue to strengthen once we get in through the new year.
That was Derek Fry, head trader at O&F Futures and Options, with his commodities commentary. And that's it for today's edition of PM Exchange. I'm Remy Hokie. Tune in Wednesday morning on January 2nd for your latest news update right here on ForexTV.com. From the entire team here at Forex TV, we wish you a safe and happy new year.